We are live. Yes or nothing? We can start.
So, good evening, everyone, and welcome to the session. I would like to start it with a brief introduction about us. So, True Ledger Consulting is a global consulting firm. We partner with global businesses and we provide modern tech-enabled tax compliance and fractional CFO services for clients. We have offices in US, based in Texas, and New Delhi. Running a restaurant is operationally intense, but most businesses actually lose control is in the back office. Today's session is focused on getting that foundation right. We'll cover key areas like sales recording reconciliations, cost structuring, sales tax, payroll, complexities including tips and overtime, multi-location cost allocations, and critical licenses every restaurant must maintain. So let's get straight into it. Now, it is my pleasure to introduce our speakers. We have CA Manish Agarwal, co-founder and partner at True Ledger Consulting. Manish specializes in US and international taxation, cross-border planning, and compliance advisory for businesses across multiple jurisdictions. Joining him, we have CA Ritvik Raj, co-founder and partner at True Ledger Consulting. Ritvik brings extensive experience in financial reporting, audit, ICFR frameworks, and global accounting operations. We also have CA Tushar Agarwal, senior consultant at True Ledger Consulting, and he has hands-on experience executing audits end-to-end from planning and risk assessment to finalization, with deep exposure to statutory audits, ICFR reporting, tax audits, limited reviews, and group reporting. Over to you, sir.
Thank you, Nati, for the warm welcome. And now we'll take forward this today's session on accounting and tax issues which related to restaurant. So
Let's share your screen.
is my screen visible,
Yeah.
everyone?
Yes, visible.
Okay. So friends, let's start with, restaurant accounting. So basically, what are the things covered in restaurant accounting? So the first thing you have to do anything is you have to do the accounting of it. But how you're going to do the accounting? How the sales will flow? How you'll record the tips payable? How will you record the sales tax liability? So these all things we will cover in this topic today. And so these are the agenda covered to the recording sales and settlement, payroll. What are the tools associated with the restaurant accounting? Sales tax, as we know, the restaurant is a tax compliance and we have to pay the sales tax on it. Yeah. Then commissionary kitchen model. What are the licenses and permits you require for operating a restaurant or restaurant? Just a second. So understanding your daily sales categories, what are the sales types? That is alcoholic beverage sales, then you have food sales, then you have non-alcoholic beverages, the payment mode breakdown. So I'll tell you the alcoholic beverage sales. So we get this kind of reports from the Toast, and I want to tell you what is Toast. So Toast is like a software or an interface where the daily sales are recorded whenever you go to any restaurant. Okay, that is a front office, that is a front level software, where whenever you make an order, that is the order that gets booked in any software. So similarly, this is a Toast system. There are numerous softwares, but I will take an example of the Toast today. So in Toast, we go to the revenue center or menu category there, and then we look for beer, wine, spirits, and these are displayed as separate line items. So from there we'll get the alcoholic beverages sales report. So New York State sales the alcohol differently. They must be tracked separately from food for sales category. Obviously, there's a food sales, and then we have a alcoholic sales, beverage, non-beverages sales. Then food sales. The food sales, and there's a type of it whether it is a taxable or not. So all the foods which are prepared which we cook it. So they are fully taxable in New York State. And those which are uncooked, unheated, preferred, which are sold off premises consumption, they are generally exempt from the sales tax. Then catering and event food, they are also taxable. We have to ensure that this category maps directly to the taxable bucket. Non-alcoholic beverages like water bottle, some sweet drinks, these are the non-alcoholic beverages. They are also taxable in the US and New York. Non-alcoholic beverages often mixed in a catch-all beverage category. So we need to split them between alcoholic and non-alcoholic. Then so when we go to the restaurant, we ourselves make payment. How do we make the payment? We make the payment by UPI here. We make the payment by cash or credit card or any other method, whatever feels like. Okay, whatever the restaurant they admits. On that basis, we make the payment. So here also in US also there's a payment mode. There's a cash mode. There's a gift card mode. There's Amex card mode, credit card modes. These are the various types of payment platforms. And then, okay, then again you get orders. How do you get orders? You also get orders by some online, uh, such like Uber Eats, DoorDash, Grubhub. So all this we need to track separately for the proper revenue accounting for it. So their delivery platforms, they remit, whenever. So the commission amount that is deducted by them. So for example, if you get their sales or revenue from the Uber Eats, they deduct a certain amount of commission. So all such things, they must be separately tracked for it. You also what happens, and there's a gift card. Like when you go here shopping, Amazon, something, Flipkart, you get a shopping vouchers. So similarly, there's an option for, gift card where you can purchase and you can have the restaurant, food, anything in the food that is with the help of gift card. Another significant feature is the tips. Like here, when we go to the restaurant and make some tips to the waiter, similarly, there's also concept, not a concept I'll tell you, but there's also out of some customary, we give some tips to the waiter, bartender. So that is also a different and a significant accounting how we have to do it, the tips accounting. So obviously, the tips is treated as a liability there. It is not, we don't book it as a revenue. And if you book it as a revenue, it will be overstatement of revenue, and this is not a proper accounting. So you have to categorize as a liability there. Then there's a like cash tips and credit tips. There are different meaning to it, and we'll just cover it here. So tips are never our restaurant income. Credit card tips collected by the restaurant are money held in trust for the employees, a pass through. That I said, it is a, you have to create a liability for it. So in this case, what happens, what would be the journal entry? The journal entry is like cash or bank, is debited and the tips payable is credited. So recording tips are revenue overstates income, overstates sales tax base, and it misstates our financial statements. So how do we record tips in QuickBook from the Toast? So when we go to the day to in Toast, there's a daily report shows which indicates the gross tips collected, tips paid out in cash, and tips on credit sales. So if it is a tips on credit card, what we do, we debit the undeposited fund and credit tips payable. So now you must be wondering what is undeposited fund. So undeposited fund, it's just like a control account. You have received some amount, or so for example in cash or credit, just ignore cash. If you have received some amount from the credit card, okay, that amount you do not receive it instantly. So what we do, we park it on a undeposited fund, and we get the credit of it in T+1 or T+2 date settlement. And then in that case, we knock off is this undeposited fund.
money आ भी रहा है.
Yeah. And then in tips, what happens when we run the payroll? In that case, what happens? What the tips payable which we have credited, that will be debited, and the credit goes to the bank. There is employer's FICA obligation on tips, where the employer, they must match this FICA 7.65%. That is, this is the current rate now on tips, which is reported by employees. So this is basically a restaurant expense. Employer can claim a tax credit for FICA paid on tips available minimum wage. Track reported tips per employee in Gusto for accurate FICA matching. So common errors that we should avoid while doing the restaurant accounting is that we should not include tips in gross revenue in the P&L as it distorts, your COGS will be not correct, your labor percentage will not be good, and other metrics also may go wrong. So then again, we do not record tip payout as a payroll expense. It hits the liability account, not wages. Reconcile the tips payable balance to zero after each payroll run. Obviously, the tips payable, which is a credit, that should be knocked off. So it's not be standing out. It can be standing out. Suppose if it is something at the mid of the month, like if you're something, the payroll runs from like from 28th to 5th of the next month. So in that case, whatever that may outstand. Then there comes the end of day settlement reconciliation. How the accounting should be settled from the toast, from the gusto, so that we do it here. So we have to pull the toast to settlement report. The toast in toast we have to go to the reports, then settlement summary that shows expected cash, card batches, and delivery platform totals. We have to compare the expected cash versus actual cash in drawer, record over a short of the cash over and sort expense account. Cash variance above 20 daily warrants the investigation, so it's not be something more than $20 something. Then record undeposited on transit fund. As I said earlier, that undeposited fund is something that's a control account. And when the credit card that settles after T+1 or T+2, so you have to just knock off this undeposited fund. So you have to use the undeposited fund in QuickBook as the clearing account. Debit undeposited fund when sales are posted, and debit bank when deposits actually clear. Failure to use this account leads to double accounting revenue when deposit hits the bank feed. Then we have to match the bank state settlement to the POS. So we have to pull down the bank statement, feed it daily, and match each credit card to the POS settlement report. Stripe a square off the typically batch and deposit separately. Tag each deposit to the correct day's sales. Any difference, processor fees, chargeback, post to bank charges or charge expense, not as a sales item. So whatever there would be any charges of it, you have to charge it. That would be your expense and not any settlement adjustment. Then there will be daily platform reconciliation like Uber Eats. So from Uber Eats also you get the sales. So you need to settle those things. The platform pays net of commission. So as I said, something if they are providing you revenue from that platform, you are getting a sales. So then obviously over the third party they will charge of commission. So that we have to net off the commission. We have to record the gross sales as revenue and commission as a delivery platform fee expense. Then Uber Eats, a door wash, they remit. How do they make payment? Either it is weekly or maybe some other arrangement, but usually it's like a weekly.
Oh,
Then there are two things here, the front of house and back of house. So as the name it appears, front of house is like something which is at the front end of the restaurant, which is, who are the people, the bartenders or which are food runners who they provide you to the food at your table. So they are categorized as a front of office, and back of office, like the cooks, the payroll thing, which runs at the payroll staff. So those things these are the called the back of office. And front of office, they have a significant impact on the revenue percentage. It covers approx 30 to 35% of the revenue. Then front of house direct cost, that is linens, tableware, POS consumables, uniforms, credit card processing fees, reservation platform fees. All these are front of house direct cost. So we need to segregate this all. The segregation helps in proper categorization of your expenses. That goes to your direct cost and direct cost. Okay. So it helps identify which part of the business is underperforming, required for multi-location commissionary cost allocation, useful for investor reporting and franchise agreement. So now this is the back of house. So the payroll. So chefs, linen cooks, dishwashers, these are all back of office staff. So they contribute certain percentage of the revenue that ranges from 28 to 35% of the total food revenue. The food cost, all ingredients, beverages, consumables used in the production. We have to track the weekly using inventory counts, beginning inventory plus purchases minus ending inventory. And the food cost, they have a weightage of 28 to 30% of the food in the food revenue. Then there are certain shared allocation like rents, utilities, insurance. So they are the shared expenses we have to split on the basis of certain drivers. So like on the basis of revenue or other expenses, it may be. For rent, like rent, that is very simple on the basis of the square foot you use it on that basis it is split. So we have to use a consistent monthly basis, for this allocation. And whatever the you use it, the drivers that should be used constantly. And make a revisit the allocation ratios and whenever layout changes, anything if that requires any adjustment to make. So you have to go back and make the certain changes as required. Now I will take Manish to go forward for the sales tax.
Yes. Uh, Thanks, Ritvik, for setting up the nice context in terms of the accounting and how the things are worked from an accounting point of view. Now, I'll briefly and go through the tax obligations for relevant for the US-based restaurant. Let me share my screen. Uh, and so, first of all, let us understand in principle the concept of sales tax in US. I'm sure many of you would be aware of this, but for the sake of simplicity and completeness, in US, sales tax, like in India, is an indirect levy which is charged on a retail sale. So, mark my word, it is charged on the retail sale. So, unlike in India, where every stage of transaction or on the every supply chain transaction is subject to GST or VAT in a previous area, followed by an input tax credit on the preceding sale, in US, there is no concept of input credit on the sales tax. So sales tax is an end user tax and all the subsequent intermediate transactions are exempt from sales tax if you are using it for resale purposes and you have a valid sales tax certificate and exemption certificate. So this is a very fundamental difference between the GST, what we are doing here in India, because we get an input credit. In US, there is no such concept. And in India, GST to a large extent is streamlined. Although we have 29 different states CGST and SGST laws, but the rate still remains same. In US, the complexity varies at a street and at a zip code level. So the tax rate can vary from one state to other state depending on the zip code. So in US, like in 45 states, there are almost 11,000 rates of sales tax. So we need to do a pin code level search of a zip code. And that then obviously happens with the help of a tool called Avalara, which I will show you towards the later part of this session. So that's the background of the sales tax. Now, obviously, sales tax, uh, the basic step is restaurants need to get themselves registered first for the sales tax purposes, and they can get themselves registered on a portal called New York Business Express. For example, if it is a New York restaurant, similarly, there are many other states in which, depending on you operate. So let me take an example of a portal called New York Business Express. So this is a portal wherein you can submit your initial registration application. So for New York, the application is called DTF 17. Just. Yeah. So let's see, for example. Yeah. So this is how, I'll just show you. I will create an application. You can. So yeah, you can let's say, create an application for sales tax registration on New York Business Express portal. You can search for application or create a new application. I'm just opening up one of the already created application. Just a sec. In the sales tax application, you generally need to give all your basic business detail like contact information, owner's detail, partner's detail, industry classification, the premises details, estimated value of your taxable sales, and then you submit this application online on the portal of the New York Sales Tax Department or New York Department of Taxation and Finance. And basis this, they will issue you a sales tax certificate of authority, like GST registration certificate. It is called sales tax certificate of authority. And the GST number or sales tax or certificate number is basically your employer identification number in United States. So there is no separate sales tax number. It's just your EIN in most cases. It's taking a bit of time. Let's load it for a while. You can show you the various sections it has for the sales taxes. Okay. Yeah. So you see there are different sections which we need to fill and go end to end. And like business information, it has sections, the members, partners, employee information, financial information, like from when you begin the sales tax, how much sales you intend to do, the banking details, all these details are required. The contact person details, addresses, all these details you need to fill. And on this portal, you can submit your New York sales tax application. So this is one of the portal. The next portal is once you register for yourself for sales tax, you will start sales tax. Now, to as I was saying, how will you determine the rate for sales tax? Now, this is the portal which we generally use. It is called Avalara. It's a US based portal, and you need to determine, for example, let's say I want to know for New York City, 51st Street, for example, and in New York. Let's see. I'm not sure it's right, but you can basis this, you can determine your sales tax rate. So this is how generally the rates come when you enter your zip code or address. It will give you the rate of sales tax, the state level, the district rate, and the local rate. So combined rate will give you 8.87 for whatever you need to charge on the final invoice value. So that's how you can determine your sales tax rate. Also, you can go on the website of your relevant state portal. Lara is generally the site. Sales tax is generally filed on a quarterly or a basis. Your liability is more than $3,000 a month. You are supposed to file on a monthly basis. Also, that filing can be done on this Avalara portal, as well as you can do it on the New York Department of Taxation and Finance portal. I'm taking New York just as an example. You can go You need to create your account with your registration number. Once you are registered with sales tax, you can create your account and then you can come to this portal to do your sales tax payments and filings. So,
Some questions have already been coming from the
yeah,
viewers. So we will entertain those questions at the end of the sessions. No worries, okay?
yeah, please. Sorry, I'm just focusing on the screen for the time being. So maybe I was not able to look at those questions. I look at those questions. Yeah. So this is the interface of the New York Department of Taxation and Finance. You can see its official government website. There are various options. So for sales tax, you can do options like sales tax payment, sales tax filing. You can do this. You can use a software and you can use as well as this return as well. So there are paid software as like Avalara is there. There are many other software like Stripe is also there, which you can use to file the sales tax through software. So same like in India as well, like you have GST paid software and you have also GST portal as well. So this is it's loading a bit, but like okay. So yes, you can file the information, uh, basic information. Are you filing a nil return? No. Then you can continue and add your sales return. Okay. Quarterly return. Select which period you want to file. Okay, you can need to enter the sales data and all that, and then you can go ahead. So uh, it's called ST1, the form name, and you can prepare. Okay, I'll close this window now. Now, so as I explaining, so and the depending on your sales tax liability, it could be either a monthly or a quarterly. And e-filing is there on the New York Department of Tax and Finance portal. The due date is generally 20th of the quarter or the next quarter, the following month of the quarter or 20th of the next month following the tax period month. And if your annual liability is more than 500K, you are considered as a large taxpayer, then you need to make payment within 3 working days of your sales. And so this are the control so that the department can ensure relevant working capital and the control over the liability. And as I said, for large taxpayers, Avalara can promote automate the tax filings, and you can do most of the things can be automated, like these thresholds, 3 banking days, or all the timelines and requirements can be met. Now, as Ritvik also explained, when we record our daily sales, we need to make sure that the sales we are recording in a proper tax bucket, whether it is a taxable or it is exempt. So generally, for our restaurant point of view, most of the sales are taxable, but certain uh, raw materials, for example, groceries, meat, eggs, they are generally tax exempt. Okay. Similarly, for uh, exemptions are there for 6 packs of beer sold to go in a grocery setting. Alcoholic beers are generally taxable. Similarly, for heated food, all any food sold in a heated state is taxable. If a restaurant sells both heated and cold version, only the heated version is taxable. So generally, these kind of complexity can also arise if you are selling frozen foods. And as I explained, there is a reseller exemption allowed, meaning that if I am procuring certain input for use in my restaurant for further sales to my end customer or guest, then sales tax is not applicable on my input purchases. There is a reseller exemption form called ST120. Here. So, uh, like any other liability or a tax GL statutory liability, we need to make sure that the daily sales tax liability I'm recording is properly tracked. And after the filing of my tax return for the period, my sales tax liability is knocked off properly. I mean, outstanding sales tax liability should not be more than for the period for which I have not filed the tax return. Up to the period of tax return, my sales tax liability should be knocked off. And also on a daily basis, I should check that the sales tax reported on the POS portal, Toast in this case, matches with my manual calculation. For example, if I'm making a sales of 4,000, so 8% of 4,000, similar amount should be reported on my Toast portal. Okay, that's called rationalization. And also the liability for the month should, at the end of the month, I should be able to see that in my QuickBooks GL, it should match with my POS report for the month. And obviously, to make sure that I comply with the regulatory requirements, I should retain the reports for the 6 year period. That is the state audit timeline by when they can do an audit on your returns and records. So this is it on the sales tax. I'll hand over again to Ritvik to explain some basics of the payroll, and I'll come back again for the taxes part of the payroll. So over to you, Ritvik, again for
Yeah.
explaining the payroll related basics.
Thank you, Manish, for giving so much insights on the sales tax. And you discussed it very nicely about the how you can register for the sales tax, the rates you can find it in the online portal. Yeah. So uh, another aspect that we'll cover in the restaurant accounting is the payroll. And this is also another significant portion that comes under the accounting part as well as we have the tax part here in the payroll. So there are certain statutory payment the taxes we have to pay to the government. So we'll cover about the non-tipped and tipped. How do we make the payment, whether the tip credit here? So in the restaurant accounting, when we do it, so we make the payment to the restaurant, the staffs. So there are various categories of the uh, staff here. We have bartender, we have cook, we have dishwasher, we have the managers here. So there are different types of rate available to them. And on that basis, the payment is made through the payroll. So now the payment can also be happen through another account, another software, which is like the Gusto, or it can be through another software as well. So justly, basically, in the most prevalent thing in the US is like the Gusto, you make the payment, or you make the payment through another softwares as well. So So the federal minimum wage versus the minimum wage. They are the New York governs the rate for it. So federal minimum wage, like it's a 7.25 hour per USD. So it is irrelevant in New York, as New York rate is always higher. In New York State, if there are 10 plus more employees in 2024, the rate is $16. So no tip credit allowed in New York for tipped workers. In New York State, outside New York State, Long Island, Westchester, 2000, the rate was something $15. So the rates also vary. Okay, as currently we have where the minimum wage is $17 here. Okay, so now if it is a tip worker, so that will be divided between the tipped and non-tipped. So just generally now in UX, the rate is something 11.35 is arrive something for the tipped workers. So on that basis, so suppose for example, if the employee has worked, if he's a bartender and he has worked for something 20 hours, and in that total hours for that week, and in that 15 hours, he was as a bartender. So he will be paid as at the rate, the 15 hours that will be multiplied with 11.35. And the remaining 5 hours that will be go to the non-tipped hours. So on that basis, there's a classification between tipped hours and non-tipped hours. Then you have also something overtime. So generally, when you exceed your total hours, okay, so something as a, for example, suppose it's like 40 hours. That's the rule there, that 40 hours that's considered for the week. And if you work beyond that, so you are overpaid for that. So you get an overtime allowance for it. Okay. Then we have something New York eliminated the tip credit. So unlike federal law, New York does not allow employers to pay tipped employees less than minimum wage. Every tipped employees must receive minimum wage 16 per hour in New York as base pay from the employer. Tips received by the employer are on top of and not in lieu of the minimum wage. So, so that whatever you received, the tip it, that is something you're above the minimum wage. Okay. And the practical aspects we will cover it here more detail. Okay, Tushar will give you the more insights on the exact how we calculate the tips and how the maybe make the tips payment with a good example. So now you have to verify the earnings after tips. Even without a tip credit, we have to run a post payroll check, base pay plus tips. That something should be greater than the minimum wage, and that should be multiplied into the number of hours the employee has worked. So if an employee worked 40 hours at $16 per day, that equals to 640. Okay. And then that $200 tips, that will be equal to 840. If the employee works 21 per hour, it is paid effectively. Then the non-tipped, the cooks, dishwashers, prep staffs. Okay, they do not get any kind of tip here. So the tip does not apply to them. And the payroll or the whatever they will be take home would be the number of hours which they have worked and with a predefined whatever the rate is, it is something for cook. As we know, the general rate that is $17. Yeah. So, and if we have to ensure that any bonuses, whether they are paid or not, that's a something non-discretionary incentive also that is also paid. So that also you have to consider in the payroll setup. Then salary non-exempt employees must still track hours. That is a common mistake for the kitchen managers. Then there is a tip pooling rules, restriction, and documentation. Okay, it's something. It's not that if a bartender who was okay, and he was serving as a bartender and he received uh, and the tip which he has received is on credit basis. It's not that something the entire of the tip will go to him. There is a proper method of allocation for the tips, and that basis it is paid. So, for example, if there are two on a particular day, there were two bartenders who had served it. Okay. So what happens generally, we have to ensure whatever the total tip which is has been collected during that day on that, and the total number of hours of the staff or the bartenders, not the staff generally will consider bartenders here. Okay, because they are involved in getting the tip here. So the total number of hours which they have worked, that all will be on that basis that there will be the allocation for the tips collected by the entire by the home by home as by the number of bartenders they have been there. So that's a methodology for apportionment of the tips. New York does not allow tip credit. New York restaurants, they can include back of office and tips pool under federal law. New York is special tips pool rules. New York deal permits tip pooling among employees who customarily and regularly receive tips. Supervisors, managers, and owners are prohibited from participating in the tip pool under the New York law. So, as I said earlier, that only the front office, which includes the bartenders, they are the persons who get the tip, and those who are at the back office, staffs like supervisor, managers, their tips, they do not get any kind of tip there. Calculating the tip share. The common methods, that is by hours worked, by points position, which I discussed earlier. So on the or flat percentage base, that is another method for the calculation of the tip share. We have to document the written. There should be the formula for the policy. There should be it should be a written policy for calculation of the tip share. So here is an example. If the total tips is something $1,000 and total points that equals to the $50 per point. So server 1 point will get for $50. Yeah. So, and what are the documentation requirements? So there should be a written tip policy signed by all participating employees. and update whenever the staff changes. Daily tip distribution log with each employee share retained for 6 years under New York law. Gusto can track the tip inputs as per pay period and calculate distribution based on the hours worked. So as I said here, there's also an overtime policy on where the staffs they get the overtime. So if they exceed their normal hours during the week, so they're paid overtime. So in all hours worked beyond 40 in a single work week must be paid at they are paid at 1.5 times. That is the standard rate, that if you exceed something, so the normal was 40 and you have worked for 41 hours, for that one extra hour you will be paid 1.5 times. So work week must be a fixed recurring 7-day period, establishing it in a writing, example Monday 12 a.m. to Sunday 11:59 p.m. Then the regular rate, more than just base raise. Regular rate is calculated by the total compensation that is divided by the total hours worked, excluding certain payments like gifts and vacation pay. Non-discretionary bonuses, shifts, and difference and hazards pay must be included in the regular rate. Example, if an employee earns $15 per hour and he has worked for the 40 hours, which equals to 600 and plus $100 non-discretionary bonus we get. So regular rate would be $700 divided by the 45, that equals to 15.56 per hour. Then we have some blended rate. So if the employee works as server, that is $16 per hour for 30 hours, and he's a dishwasher, $14 per hour for 15 hours. So that was 45 hours total. So that's a blended rate that will be multiplied with the $16 and plus as a dishwasher 15 hours into $14, that will divided by the 45, that is the total hours taken. So that comes 690 to total, and the number of hours that is divided, that comes 15.33. So common control entities aggregating hours. IRS and duality treats commonly controlled entities as single employer for OT purposes, overtime purposes. If employee works 25 hours at restaurant A and 20 hours at restaurant B, same owner, that equals 44 hours. So 5 hours is OT owed. So the solution is that designated primary employer identity or use a shared Gusto account across entities. So we covered here about the allocation of the tip here, the overtime payment, the blended rate here in this payroll. And now, when you start a restaurant business, so you need to have and you need to get certain licenses. So, so in New York and other US states, there are a comprehensive licenses which you have to take for operating a restaurant. So I just I'll list you down something there that is something federal FICA, Social Security, medical care, additional Medicare, New York State income tax. So there are certain taxes as well which are levied on the payroll tax, like FICA, FUTA. Then we have a SUTA, that is state unemployment tax. Then we have federal employment tax. So these are the things, and which are percentage are designated percentage are there. On that basis, the this payroll, whatever the would be the payment. On that basis, certain rates are charged, and that is deposited to the government. So who pays? The employee also pays, and the employer also pays it. Now you have to set up the payroll taxes. You have to correctly in Gusto. Gusto, that's something where the online portal, in that portal, we have to make a proper segregation and allocate the payroll taxes. The employee master setup, that is a critical field where you have to set up each, like if they're employees, you have to correctly set up so you have to make a correct configuration for it. Yeah. Now, if it is a tipped or non-tipped bartender, so on that basis, you have to make an allocation as per designation as well for it. You have to classify the residence address, the work allocation, and the tips status. The tax registration requirements before first payroll. So in New York, the employer registration, which is NYS 100, you have to register with the New York Department of the Labor for this the correct allocation of the payroll, making the payment for the payment taxes. Then we have to make the payroll, and it is in Gusto. What happens that whenever you post the payroll, the Gusto the makes payment with the statutory deductions which are there. It automatically makes the payment to the employees as well, and it is deposited to the government as well. So we have a QuickBook integration with this QuickBook integration with the Gusto, where you can immediately after posting your payroll, the data can automatically flow into your QuickBook as well. So now this is commissioner kitchen model, and I think I request Manish to take this forward from here, the commissionary kitchen model.
Yeah, thanks, Ritvik, again for explaining the payroll aspect very nicely explained. So commissionary kitchen model is something which is like a shared kitchen model. For example, uh, you own a common basement or a kitchen from where all the purchases and the procurement is done. And this is done at a combined, uh, a single entity level due to volume discounts or due to better rates. You purchase at one shared kitchen, and then you from that kitchen you distribute the ingredients, the foods, and the other things to the restaurant. Now the question come in: how do you track the inventory, the consumption from that is purchased at a single entity level but distributed to the other restaurant? So in that case, let's just slide move. Yeah, so in that case, I think we need to identify that what are the direct costs and what are the indirect costs. So direct costs are your direct food costs. For example, your cheese, your meat, your uh, flour, dough, all these which can be directly identifiable to a particular restaurant or an outlet. It is allocated directly on the basis of the consumption, and for that usually you can have a requisition template or a wherein you will put up the name of the entity that has requested the ingredient, the quantity, the rate, and on the date on which, and the product code. All this on the basis of it, you can track the consumption. For the common cost like rental, basement rental, porter cost, the salary of the handlers, the rent, all this can be allocated as a basis of your restaurant's revenue or as a percentage of the direct cost allocated above. Now, at the month end, what we need to do to allocate the cost properly from the shared kitchen to the individual restaurant is you track up all the individual consumption slips or the Excel tracker and make sure that whatever quantity and rate is there is entered as a consumption in the relevant restaurant, and along with the proper inventory if they are left with any closing inventory. And also there should be a proper markup to be charged on the, because the shared kitchen is managing all the overheads of purchasing as a single entity and saving up time for the individual restaurant. So the shared kitchen should be compensated for its services in the form of a reasonable transfer pricing markup. Now, generally in a shared kitchen model or a multi-restaurant model, what can happen is, let's say an employee works in over a different shifts in two different restaurants, and each of the restaurant withholds taxes on the basis of the hours that they have worked in their relevant respective, of course adding overtime. But what happens is, uh, like in India, US also has a progressive slab rate system for individual taxation. Let's say employer restaurant one withholds taxes considering he is on the basic slab rate of 12%. And also employer two also deduct taxes considering that his wages are falling within the slab one. So individually they are determining the withholding right, but when they combine the wages, let's say the employee's total salary falls into the next higher bracket of 12% or let's say 15%. So at the end of the year when he's doing the taxes, the employee, he will realize that the withholding has been done not correctly, and he is supposed to do additional taxes along with interest. And obviously, these restaurant employees are not so very high earning people. They usually live paycheck by paycheck. So they will come up to their employer and argue with them that why you not withhold the taxes correctly. So the best solution in this case would be on every 6 monthly basis, you review your wages on a total basis that how much has been withheld and how much needs to be still withheld. If there is any shortfall, you should do a supplementary withhold so that employees total withholding is covered at the end of the year. So that's how the reconciliation at uh, although there is other approach which is called a single designated paymaster entity, but that's a complex. The approach which I am telling is pretty much easier and which we are also following for our clients. Now it's time for the some live use cases of the tools that we are seeing, like Toast for daily sales reconciliation and Gusto for payroll and some other tools. So I'll request my colleague and Tushar to take over this and explain some of the live use cases. Over to you, Tushar.
Hello everyone, a very good evening. We are having a good session so far. So from whatever we have learned from Ritvik about accounting of the sales and seeing on the payroll side, how do we account the tip table and the other aspects of our restaurant accounting. Let me run you quickly through what we actually do when we are recording the sales in our QuickBooks and how we make sure that everything is been accounted correctly. So unlike other businesses, what happens here is that we have a large volume of sales that happens. There are multiple KOTs, there are multiple tickets that happen in a day. So entering each sale becomes very difficult. So the practice we generally follow is that we do a consolidated entry at the end of the day, which is generated from the Toast report as well. So Toast is basically the POS as explained by Ritvik and Manish. So this every entry, every order of yours gets punched in here, and at the end of the day, we can generate the summary. So I'll run you through the cycle of an entire day of what happens, how the sales gets accounted, and how the payment gets recorded on the QuickBooks on the accounting side. So for an example, we are taking the sales of 19th April. We get a summary here. There's a sales summary report which you can generate from the sales side here. Let me just quickly navigate you through here. So under sales, you'll have a sales summary report. This shows you everything, what happens throughout the day in the particular restaurant. So when you come here, they'll give you the sales wise category summary. That's non-alcoholic beverages, spirits, beer, wine, cocktails, desserts, etc. So this is the gross sales and this is the net sales is after the discount, right? So what we do generally is that we record on a three broader categories, which is food sales, non-alcoholic sales, and alcohol sales, to see what is the margin that we are getting and to see how much is contributing, which part of the revenue is contributing to the most, right? Then we do so this is a format which we follow for our sales receipt entry. Uh, Instead of invoicing or generating a bill, we follow a sales receipt approach. We have tried and tested the journal entry approach as well, the invoice approaches, but this is the approach which works the best. So we have created for each of the category food sales, alcohol sales, beverage sales, we have created a separate product in the QuickBooks itself. And for each one, we allocate the amount, right? So the total comes up to 2015 here. So I'm just quickly running through it. So the gross sales for the particular day is around 2015 here, if you notice. That's what gets accounted across the category. We segregate according to the category which is being which has the amount. And then we have the discount, which is a separate product again. We can see the discounts here. Net sales summary comes up here. So my net sales inclusive of this comes to 1943. Then we have the sales tax payable, which is again which can be seen here. The tax amount is 172.24. And when we do 8.875%, which is the New York state tax rationalization, we will get the same amount here. When we do it for the net sales into 8.875, we get approximately the same amount. There's a cent difference of 20 cents or something, which is fairly common, which gets eliminated at the end when we are finalizing the sales tax. There's tips payable, which is again a liability. This is not a revenue source as explained, which will inflate the sales tax in turn. So tips payable goes into our liability in our QuickBooks, in our balance sheet whenever we see. And tips payable can be verified here. So one second. It's on the top. Yes. So tip summary, you can see here 362.36. 362.36 gets accumulated here. Then, as explained, the food aggregators like Uber Eats or DoorDash, we can account for them here on the summary. We'll get payment summary. This says that there's 88.2 cents of Uber Eats order, which will get separately accounted here because Uber Eats does not deposit every day. Uber Eats generally settles on a weekly or monthly basis on whatever we choose. So this gets accounted and this will be as a part of our accounts receivable, right? And then we have the credit card settlement, which you can see from here. There's a 2199.38 cents of credit card payments that we have got, which is across Amex, Discover, MasterCard, Visa. We are not segregating further. Rather, we are including it in the broader category of credit or debit card. So 2199.38 cents will come under credit card. And if there's a cash receipt, for example, on this day we had 190.43. This 190.43 will directly form a part of our cash in the balance sheet. So this is what the entry looks like. This is what we make as a template, and the same template gets logged in our sales receipt. So what we select the date, we write the number, which is gets auto generated. We have created a customer, which is the daily customer for our easier accounting. And the payment method and deposit to account is also created in a similar way so that we are recording daily sales on a uniform basis. So whatever amount which you have seen here gets punched in here. And we should ensure that the sales receipt comes down to zero because we are recording the revenue as well as the receipt here. So my sales receipt at every day when we are recording it should boil down to zero. If it is not boiling down to zero, that means we are missing out on some either a payment part which is which is being received or a sales part which is not being recorded, right? Once we record the sales receipt, this goes into the respective product or service category, which we recorded in the undeposited funds. And when the settlement comes through, of course, the settlement, for example, we have the $2199 settlement here, if you see, which will not come entirely. So there's the toast being our POS here. They will deduct a certain merchant service fees, which is around 2% ideally, gets deducted, which varies according to the card also. If it is a Amex, there's a higher percentage. If it is different Visa or a MasterCard, it's a lower percentage, right? So we will record the deposit now. So when we go down to the toast, we have a sale settled deposit daily breakdown, right? So when I select the 21st, because it follows the T plus 2 day of settlement. So sales of 19th April will get deposited around 21st April, right? So when I select the date here on 21st April, it shows me perfectly that the sales date was 19th April. The total payments received was 2199.38, which is perfectly matching to what we have recorded, right? And then the total fees of 59.81 cents. So the net deposit comes at 2139.57. But when we are recording the deposits, what we will do is we will first on the particular 19th April, what we have is 2199 of credit card and we have a Uber Eats receivable. Because Uber Eats receivable won't be deposited right away, what we do here is we segregate it into a receivable part. So this will go into my accounts receivable, which will be my current asset, which will get offset when the Uber Eats actually deposits in my account. And the remaining part, which here is 59.81 cents as per the fees which has been deducted, will go to my merchant fees. So this will be a part of my operating expenses. We've created a separate ledger to track on whatever fees has been deducted. So we do the respective entries here and we select that 2199 and 88.2 is what we are recording now. And the difference is generally the merchant fees. So once we save and record this, and let me quickly navigate through the bank transactions. Hopefully it reflects there. So you see right here, when we have recorded the deposit, now we have received a certain deposit on 21st April, which is 2139.57. And according to our deposit breakdown, we also have a 2139.57. That means this is the particular sales deposit that we have received, which is pertaining to the sales made on 19th April. So when we have recorded the bank deposit here, and we have the sales receipt, which is matching. Now the next step will be to match this deposit. Once we match this deposit from our bank feed, this gets moved out from here and my transaction is nullified here. Now, when I reload the bank statement, and the profit and loss, we will see the respective amounts getting reflected here. So I'll quickly run through the ledgers also, which forms a part here so that we have a better understanding. So when you are checking as on date, there'll be the following amounts. The cash which we have received gets deposited here, 1005, which automatically flows in here. Then we have the daily sales clearing, which is 0 because we have cleared the latest sales report. The Uber Eats receivable is cumulative, including the $88 sales that we had made on the particular day of 19th April. This is inclusive of that, so it gets reflected here. UDF is the account which is still getting pending to be paid, which is the other ones that we have to record. And yes, that's pretty much it. And the tips payable comes in here, and the sales tax payable gets reflected here. So when we are processing the payroll on each cycle, this tips payable should basically become nil, because the payment that we are going to make on the payroll date the tips part will form a part will get paid from this particular GL. This because we have already recorded the liability which is to be paid to the employees. So we will record, this will get nullified. So every time you process a payroll, we should ensure that the tips payable becomes 0. And the sales tax payable becomes nullified when you pay the actual sales tax, which is on a, right, like Manish has explained, we can pay it on a monthly basis. To for some of the restaurants, it is on a quarterly filing, but payment can be done in advance on a monthly basis to reduce your liability at the end of the 3 months. And your profit and loss also will reflect in the similar way. Your food sales gets accounted here, your beverage sales get accounted here, your alcohol sales on the respective. So we can clearly see on which contributes to total of how much revenue. The total discounts come here. Cost of goods sold, how Manish has explained on the commissary kitchen or the regular recording of your expenses gets here. And this part, the payroll part, will again get accounted every time you process the payroll. We segregate in the back of BOH, like Ritvik had explained, kitchen wages come form a part of the BOH, and FOH comes here, right? And the taxes respectively gets accounted here. And the merchant fees, we have a separate ledger again to keep a track here. That is 3047 on a cumulative basis. Right. So this is the model that we follow for recording the sales. And this is the tried and tested model that we have been using for quite some time after running trial and error on various models. So this is the one which works best and gives you the best result. Manish, do you also want me to run quickly through the payroll workings as well?
I think we are good for now. I think.
Okay, cool. You can take it forward.
Okay. Thank you so much, everyone, for taking out the time. We have some questions. Let's take some of the questions. And the first question is, I think, Tushar or Ritvik, how can we account for commissions from third party like Uber Eats? So, any of you can answer this? Yeah, Ritvik.
Ritvik, are you taking?
Hmm.
I think I'm muted. Ritvik, you're muted.
So it's like when we get some sales from the Uber Eats, so that is our revenue, but again we have to pay commission to it, right? So the proper accounting that we follow, we make a receivable, we do a debit for the Uber Eats receivable and credit to the sales. And then when we make the payment for it, we have to make the commission payments. So that commission will go as an expense. So whenever the Uber Eats, they make this, they send us the statement for this is the amount of sales and this is the commission which we have agreed, so that will go to an expense for it.
Yeah. So the proper way to is to not to adjust from the sales, but to record it as a commission expense separately.
Right.
Okay. The other is, can the sales tax be paid using QuickBooks? The payroll taxes can generally be paid from QuickBooks. Sales tax, we don't see a functionality of paying from sales tax from QuickBooks. But QuickBooks can help to calculate your sales tax liability in some cases, but payment is usually done directly on the portals or some specialized softwares like Avalara or Stripe, I think. I'm not sure, but QuickBooks I haven't used for the payment of sales taxes. Okay. I think these are the questions we have. And thank you so much to
Yeah.
all who have joined. And we appreciate your attendance. And we'll be sharing a recording and the copy of this presentation after the session is over. So thank you so
Yeah,
much
there's
for all of
another
you.
question here. We have got one question from Roshan.
How we charge for booking for this? Sorry, we don't understand how we charge for booking for this. No, I didn't get that.
Can you expand a little, Roshan, for this question? We are not.
If your question is how do you charge the client, I think
Might be you must be asking.
page
So
typing. Okay, that is. I will be able. Okay, let's close the. Unnati, you can do the closing remarks and we may close it later once we have the question. Okay. Yeah.
So thank you so much for the insightful session, and I'd like to thank all our attendees for joining and engaging with us.
Yes. Thank you and have a great
thank
evening,
you.
all of
Thank
you.
you, everyone. Thank you.
Bye-bye. Bye.
Bye.
Everyone.
Thanks.
Roshan, you can reach out to us personally over LinkedIn or on a mail ID of ours if there's a particular question that you need to be get answered. We will address it there. Thank you.